So we did a Singapore version for this, and you can check it out in the description down below. But since a user by the name Satoru Gojo asked if we can have one for the US market, you guys asked, so here it is. So one of the biggest benefits for the monthly dividend strategy is the ability to create cash flow for you. But having said that, investing in dividends is like watching paint dry, which not many people can accept because it's slow and boring.
Thank you, Velveeta. Well, it started off boring and slow.
So with dividends, you will not get pumps nor will you get a lot of dumps, which is a good thing depending on what kind of investor you are. But for me, I do love dividend investing because it takes out the need to constantly monitor the stock prices or worry about whether I should be letting go of my stocks. So in my US portfolio, I only hold one monthly dividend ETF, and it's an ETF that I really like, which I believe is the best ETF to hold for monthly dividends. But before we go into that, there are some stuff that we need to address or discuss first so that you guys get a better picture of why I picked this ETF. So the first thing we're going to talk about is taxes. So when you're investing in a US stock or an ETF, there are some taxes involved, be it whether you're a Singapore citizen or a Singaporean. So as long as you're invested in the US market, you are subjected to those taxes. So unlike Singapore, the US do have capital gain taxes, and this applies to dividends as well. So if you're doing dividend investing in the US stock market, you'll be subjected to 37% in taxes. So if we put it into numbers, this is how it's going to look like. So if you have 100 VO shares, which pays a 1.52% dividend, based on the numbers during the recording, you will receive roughly $608 in dividends, pre-tax. And after 37% taxes, you'll be receiving roughly $383 in dividends, which means that you lose $224 due to taxes. So it's quite a hefty sum if you do have a large dividend holding. So the second thing we're going to talk about is payout ratio. So as we all know, the US market is much larger as compared to the Singapore market. So there are many more options available, but this also brings a problem of finding what's good and what's bad.
Bad, good, good, bad.
So in short, if you're investing for dividends, you want a company that ideally has a low payout ratio. So the payout ratio refers to how much of the company's profit is taken out to pay shareholders on a monthly basis. And this is always indicated in a percentage form. So if you look at a company like Stack Industrial, so this is a monthly paying dividend stock, and the payout ratio here is 149%, which means they are taking on debt to pay dividends to shareholders, which is a really scary thing to do.
Scary stuff, scary stuff, scary stuff. Lunch!
But having said that, a good payout ratio that you want to look for is anywhere between 30 to 60%, because this allows the business to use the majority of its profits to reinvest into the company, allowing it to grow even more. And if you're like me looking to invest in ETF instead of individual stocks, one thing to look out for is the expense ratio. So expense ratio is how much of the fund's assets are being used towards paying off administrative and operation expenses. So with a higher expense ratio, this means more cost to consumers. Lower expense ratio means less cost to consumers. So anywhere between 0.5% and below is considered a pretty good expense ratio to have if you're investing into ETFs. So with that said, let's talk about the monthly dividend ETF, which I love a lot, and it's SPHD. So SPHD is Invesco S&P 500 High Dividend Low Volatility ETF. So if you have no idea what this means, basically SPHD holds the top 50 out of the top 75 highest paying dividend stocks with low volatility in the S&P 500. So in total, SPHD holds 50 different stocks in the S&P 500 list. So we might not know all the stocks here, but there are some big names that we've probably heard before, like AT&T, Philip Morris, 3M, Hasbro, Citigroup, Clorox, Kraft Heinz, Aviv, Gillette Sciences, and UPS, just to name a few. So if we dive deep into SPHD holding, we can see that they are well covered across different industries, which is what we want. Because if you are diversified, you can kind of weather all the storms. So if you break down SPHD's holding by industry, this is how it's going to look like. You have 18.8% in real estate, 17.2% in utilities, 13% in consumer staples, 9.3% in communication services, 8.5% in financials, 8.3% in materials, 6.23% in healthcare, 5.59% in information technology, 5.2% in energy, 4% in consumer discretionary, and 3.8% in industrials. So basically, SPHD, the ETF, covers almost every aspect of life. But now we got to look at some numbers that SPHD has. So SPHD currently is at $40 at the time of recording, and the dividend trailing for the last 12 months is at 4.28% or $1.74 per year, which is still pretty decent. So before you guys go crazy on me, do understand that $1.74 is split across 12 months, so we are looking at roughly 14 cents a month, which allows you to reinvest your dividends, and we'll cover that later in this video. So the payout ratio for SPHD is at 61.04%, which is slightly higher than the payout ratio I would have in mind, but that is something that I'm able to live with. So now let me tell you why I love SPHD so much. So because of the holdings that SPHD have, we have named a few big brands, and if I were to invest into those companies individually, this will become a very big problem for me, because I'll have to look into each and every company, decide when to purchase, how much to purchase, and on top of that, it's gonna cost me a lot of money. So as we're going with an ETF like SPHD, I do get to enjoy the dividends from all these stocks with the purchase of just one ETF. So right now I'm holding roughly 63 SPHD, which is giving me roughly $8 a month. And I'm looking to own a little bit more, or maybe up to 200 SPHD, which then will give me $28 in cash flow every single month, which can then be put towards purchasing blue chip stocks like Apple, which I really want to accumulate. And in some way, it's gonna be like free purchase of Apple stocks that is contributing to a larger growth in my own personal portfolio as well. So if you're looking to start investing or start dividend investing in that sense, having a strategy is really important here. So with SPHD, since it's a monthly paying dividend stock, this essentially allows you to compound your money on a monthly basis. So let's say if you are looking to invest maybe $200 a month, and you start in January 2023, this means that you can purchase 5 SPHD. And in February, you receive 70 cents in dividends. And if you continue to invest 5 SPHD a month, this means that you only need to fork out $199.30. And in March, you'll receive $1.40 in dividends. And if you purchase another 5 SPHD shares, you only fork out $198.60. So this cycle can go on and on and on. So in my honest opinion, this is a very slow way to grind money. But let's say if you own 200 SPHD, which is roughly $8,000, you'll be receiving $28 a month in dividends. Granted, $28 is not a lot of money, but this money can then be reinvested into other stocks or other ETFs that you're looking to buy. And if you reinvest this money back into SPHD, in some way you are stacking your money, which can provide more growth for you in the future.
What money? Look at the stack of chips.
So I guess the biggest question that you have right now is, should I invest in SPHD? Or who is SPHD for? So if you're someone like me looking for passive income but don't want to constantly look at charts, SPHD is a good tool to have. So SPHD is suitable for long-term, income-oriented investors who are looking for some form of diversification. But if you're looking for growth in the short term, then SPHD isn't something that you want to look at, because the growth of this ETF is really slow, and compared to VOO, which has gained 14% in the last 6 months, SPHD has dropped by 7%. So I hope this video has given you some insights into one of my favorite ETFs. Let me know in the comments down below if there are any other stocks or ETF that you're looking at for passive income or even for dividend investing. If you've enjoyed this video, dropping a like will help us a ton. Subscribe if you haven't, and as always, stay safe, invest safe, and I'll see you guys in the next one.